was like nobody, very, very few investors. And then after 3 years, we started to get a few bites in institutions. And by 5 years, before we knew it, we were at capacity and couldn't take any more investment.
All right, guys, here we go. Before we get into the show today, I thought what we could do is just go around, and I want to hear what you guys are up to at the moment in terms of your training and health. And I'll share a little bit about what I'm doing. I've changed things up a little bit, as you can tell. I'm struggling to fit in this shirt. But what are you up to, David, like at the moment in terms of your training and health? Anything new?
Well, I'd say on the fitness side, well, first of all, I try to keep it fun. So I do track my minutes, and over a week, I try to get 4 hours in zone 2, an hour in zone 3, and an hour in zone 4 and 5, and then 2 hours of weights. So it seems, and then about a good 2 hours of rolling stretching, but that's over a week. It seems like a lot, but over a given day, I kind of go with how I feel. So I might play a game of tennis, I might hit the rower.
We still got to get that game going, by the way.
Absolutely. That'll be a competitive one.
Yeah.
Or get out in the canoe.
Yeah.
So there's a variety of different exercises I do, and I kind of look at my minutes at the end of the week to make sure I have the right balance.
So what was that, like total of 7-8 hours?
It's something like that.
Yeah.
But it really doesn't feel like that. It's important to me that I do some kind of movement every day. So even maybe after a hard hit day, I might be worn out the next morning, then I might do easy 30-minute zone 1 on the bike. But I think it's very important to me to do some kind of movement exercise every day.
How much has that changed over the years for you? Like, not to give your age away, but, you're a middle-aged man. Like, have you always had that discipline for this kind of work?
It's really modified as I learn more about fitness. So obviously when I was young, we didn't have this information. You go hard every day, and then
more is better. More is better.
Yeah. And then I got into my 40s and started overtraining. It was sort of like I'd go work out hard. I was very into swimming. I'd go hard at the pool, and if I did 4 workouts in a week, then I'd start to get overtrained.
Yeah.
And then I learned about the zone 2 training. So then I really swung the other way and went very heavy in the zone 2, very little weights. I was feeling a lot healthier, but I was leaner than I wanted to be. Mm-hmm. So then really it was in the last 6 months we developed this balanced system to follow our points, and that got me hitting the resistance training a bit more.
Nice.
Make sure I get 1 or 2.
Well, it's working, mate. Either that's a smaller shirt or it's actually working. Either you're going and buying smaller shirts.
That's the key.
How about you?
Probably similar to Dave.
Yeah.
I've migrated to more of a balanced type of workout regimen compared to the past. When I was in my teens, 20s, 30s, it was pretty much just pure strength. A little bit of cardio, did some sports. I started working out, because of sports. Continue enthusiasm to play sports, but don't do that as regularly.
When you say play sports, what do you mean?
Football. I played, as a kid, football, basketball, track, the whole shebang. But up until really, we started to dig our nose into the health space from a more personal interest and understanding what type of impacts we were having from the exercise programs that we were doing. I was doing predominantly strength, like I said, and migrated to Dave's breakdown is very similar to what I do today in terms of, zone 2 cardio strength, slow functional type stuff, yoga, try to do a couple hours a week, like Dave mentioned. So fairly similar. In fact, Dave and I, often compete with, we have a program that we look at with minutes and points. And so, you can cap out up to 1,000 points. Which
you guys are crushing me on this, by the way. I don't think I've even playing, really.
Yeah, no, we have some fun with that. So. Yeah. But it's, to me, the benefit of it is if it weren't for that kind of competitiveness and framework of that program, I probably would on a Sunday go, you know what, I'm going to just go do strength in the gym or paddleboard or something that doesn't even get me into a zone 2, 3, or 4 register, let alone 5. But because of this, I'll go, I got to go run 60 minutes today.
Wow.
to get up to, the zone register that I need to
You're
get
trying
my
to
points.
because you're trying to beat your business partner.
Not trying
here.
to. I'm
Hey, I got a little side story about you. So with our club, the wellness club that we have here, we all got given Garmins and Aura rings, and we're testing and collecting data from our individuals. And so I got mine in the first week. My Garmin's talking to me on the Saturday afternoon and say, Greg, it looks like you've had a really relaxing day, basically you've been a lazy sack of shit, So I text Barry and I said, isn't it funny how the Garmin tells you how lazy you've been? He's like, Greg, I've never seen that.
What are you talking about? I've never seen that.
I was like, oh man. So look,
I just thought maybe he had a setting or something that was causing that.
well, it's so
My
funny.
Garmin's yelling at me to stop, slow down.
Yours is telling you to
Yeah,
stop.
yeah,
See, I haven't. I don't know. And I'm the one that has a professional athletic background, and I feel like I kind of went, the pendulum the whole other way. And to your point, I feel like now all I'm doing is focusing on strength. Like I like to feel like I'm strong, and I've noticed that when I do run, and I'm probably running beyond zone 2 just because it's more comfortable. I suddenly am at 160 heart rate, but it feels good. So but I feel great doing strength work.
Yeah.
And
Well, you're like Forrest Gump. You ran so long that you just stopped one day and you're like, I don't want to run anymore.
Did I tell you that story about my final race? It was in Beijing, and it was 500 plus races in or whatever. And I remember they'd flown me over there. They were looking after me. I got out of the swim with the lead group, and I was in a good spot. And I started on the bike, and about 2K in, I was like, I don't want to do this anymore. And I rode straight to the hotel.
Did you really?
Yeah, I called Laura and I said, I'm retired, I'm done.
Wow.
And I called the race director, and and they were very good about it all. But it was a Forrest Gump moment where I was very fortunate to be able to retire on my own terms. But there is an element of like, I don't want to swim, bike, and run anymore. I did it for so long. But I know that all the health that I need to actually still.
So let's let you brag for a moment, because a lot of people probably don't know all the credentials and accolades.
Well, we're all going to go brag in a moment, but
well, I mean, particularly about your professional sports background.
Yeah. So my background was triathlon. Spent 27 years doing it professionally. And it was a great career, a couple of Olympics, and held the world number 1 for 3 years. So I'm really bragging right now, but it was a great career. I feel so fortunate. Like I keep saying to my wife, who was also a professional triathlete, and I'd love our kids to have the opportunity to be professional athletes. It was really, don't get me wrong, there's a lot of stuff you don't like, but it's a pretty great opportunity to see the world, to experience a lot of different cultures, and truly learn a lot about yourself. Yeah. Emotionally, mentally, physically, all of that. Yeah.
So I'll reciprocate your story with a quick story of my own. So the first time that my wife Rosie and I were going out to dinner with Greg and his wife Laura, they invited us to dinner, and so I told Rosie, we're going to go to dinner with Greg and Laura, and they're both professional athletes in the past. And so she goes online and she's looking up information, and she comes to me and she goes, do you know they're the fittest couple in the world? She's like, I can't go to dinner with the fittest couple in the world. I'm going to feel
ancient history, people.
Yeah, I think likewise, Tyson are afraid to play the two of you in tennis.
We're afraid to play anybody in tennis because the problem is, and I've said this to you before, because I was good at swimming, biking, and running, and I focused on them so much. Then everybody thinks you can go do, what are some of the things we've done as a team here at Voloridge, like
the wall sit.
Well, a wall sit or a plank or...
Well, the crow's pose.
The crow's pose. I can't do any of it. I can swim, bike, and run.
I was giving you guff last time. I said, what are you doing? Mr. Olympian, get out of here. What are you doing?
And this is the problem.
A few more minutes. Come on.
I know. And it's even like, go play tennis. It's like, I picked up tennis a couple of years ago, but I'm not good at tennis. I'm just hitting a ball and running around trying to get it to it. But it's funny. But I think it's good that we do this, because I want to hear more about your backgrounds, because even though I've been working with you guys and we spend a lot of time together, I actually want to rewind the clock on both of you, because I think I love to do this in the sense of knowing how do we get to this point? And so David, I want to start with you. I want to rewind the clock. You're arguably, in fact, I'm going to give you're the world's greatest data scientist. And that doesn't just happen. It's not just talent, I got this.
And he's been that for more than 3 years.
And he's been there for more. But that's what I mean. It's like you've done this for a long time. Were you always drawn to numbers, math? Was it a talent? Was it a passion? how did it all come together? I'm really curious.
Well, I guess I had no idea I'd be a data scientist as a kid because that science didn't exist. But I was very into math and numbers from day one. I would do math competitions in middle school and high school, and then ended up going to MIT and studying math there. But then when I got to the higher level of math, the numbers turned into letters, then I got less into math. So I would say I'm not at the level of mathematician of real mathematicians, but to kind of get back to numbers, I sort of switched over from math into data science. So now I'm just crunching lots and lots of numbers, which is what I love to do.
So when you say data science wasn't around, when did data science even come around then as a science?
Well, I'd say even early in my career, it wasn't even called data science. I joined a company called MedAI, and they were calling it AI.
Oh, wow.
And it was really from the beginning, machine learning algorithms, some neural networks, regressions, decision trees. But we didn't even call it data science back then. They were, everybody called it something different.
When was that? Were we talking about the 90s?
And that was like 98, around there.
Yeah.
And so that's where I really got into it. There weren't a lot of data mining tools around. So I ended up developing my own at the company. Now you got all kinds of tools out there. Because I had the software engineering background too, so I really programmed my own data science tool to crank the numbers the way I crunch the numbers the way I thought they should be done. But other people weren't doing that, and so that sort of got me. People were very skeptical of my methods, and so I got into data science competitions, or I guess they were called data mining competitions at the time, where they would just put out some data set like, hey, here's a bunch of predictors and predict, like when in 2004 there was a competition on predicting different, like classifying matter from antimatter using all kinds of physical properties. And I'm not a physicist, I didn't know anything really about the variables, but I won the competition. I had the highest accuracy because I had the best machine learning algorithm. And so really through those competitions, I sort of proved to myself and others that these methods I was developing were better than the current state-of-the-art data science techniques.
You wouldn't have had any, do you have a mentor in this field? Because it's so new, you there's a creative element to what you're doing. So right side brain, it's not just all left brain mathematics, there's a right side creative process as well probably. And you don't have did you have a mentor in this space?
I really didn't actually.
Yeah.
Really, I came into this small company that was trying to do AI and nobody else knew how to do AI. So it sort of forced me to invent my way of creating software to crunch the numbers and how to do these models.
Wow. So let's give yourself a little bit of a platform right now. You said you won that competition in 2004. You went on to do more competitions. Was that a thing after that? And you started winning?
Yeah, I got into actually the competitions. I started in 2002, and the very first time got an honorable mention, and then a runner-up in this worldwide competition. So 2004 I actually won 2 of them, and 2005 won another competition based on the class of predicting liquidity crisis of companies. So it was all these different topics, but using sort of the same basic algorithms. And so really, I would say that I went several years when I started Voloridge. I got very busy and didn't do as many competitions, but came back to one that was really big called the Heritage Health Prize in 2013. And because they put this very big, it was the first one with a very big, multi-million-dollar prize, and so it attracted tens of thousands of the top data scientists. And I was able to assemble a team of 7 people from maybe 4 or 5 different countries, and we won first place in that data competition as well. And so that was a good one related to the health. I was predicting hospitalizations.
No way. Was that the catalyst for starting to think about moving into health?
I don't think it was, because I was actually predicting health outcomes earlier in my career, but it wasn't. We were doing it in a way that was not as impactful. It was using more just claims data, insurance data. now that we're really getting into the biomarkers, now we can actually come up with algorithms that help people live longer, live better, avoid disease. So, so I don't think the competition was the catalyst. I mean, data science in general, the success at Voloridge helped me to believe that we could introduce the system that worked really well in other industries, and that we could really make a difference in the health field.
Dave, just for the audience, so that folks that are less familiar with this, the competitions that you were in the early part of your career were through KDD, and today that's Kaggle. Is there any additional information you want to share to help people that may want to look that up online and get some understanding of the host and how these competitions are sponsored, et cetera?
Yeah, so the earlier competitions were centered around it was called the KDD Cup. And so that was the big competition several years ago. But then the competitions evolved to this platform, Kaggle.
Which is owned by Google now, right?
So,
Which is owned by Google now, right?
Oh,
I
think so. Yeah,
I
think so.
Google owns Kaggle now.
Yeah, and so Kaggle is this great platform that was created for people to host and compete in competitions. So you actually have thousands of data scientists on the platform, and they all have rankings, and so it can be used as a recruiting tool also to find good data scientists at certain kinds of problems, and they have all kinds of different data science problems on that platform.
Shifting gear a little bit, because this just came on. So in 2008, the housing crisis. Did anybody actually use data science to predict that? Remember that movie?
Big Short?
Big Short. Were they using data science for that?
I don't think so. No, that's more of a fundamental play.
Yeah.
I'm sure there's somebody that would say that they use data science to forecast it, but
I just want to figure out how to use David going
those types
forward.
Those types of events, outlier events, are really hard to use data science.
Is that right?
Yeah. The idea of data science, you can predict events that have repeated many times
Right,
before.
right,
So you can
yeah.
predict heart attacks and cancer and outcomes.
Because they're happening often.
But a one-time outlier event really is not a machine learning type of problem.
Yeah.
But then going back, when did you guys meet? So you'd already built businesses and you're in.
Yeah, my background was in finance. I started my first company in my mid-20s with another partner that Dave and I have in Voloridge, Sean. And at that point in my life or career, I was contemplating going to grad school to get my MBA, and had that fork in the road decision of going that route or starting my first business, which I chose the latter. Started my first business, which was finance. Service provider type of company that we ended up selling 10 years later to a private equity shop. And during that 10-year tenure of that business, we had known Dave. He wrote actually a little software program for us. We knew him professionally and personally.
How long ago? What year was that? When you guys?
This was in late 90s.
Oh, okay.
Yeah.
Well, you guys go way back then.
Yeah.
Oh,
So
yeah.
we all got out of school, mid 90s. So this was kind of late 90s. And so after we sold that company to the private equity shop, we were looking for new things to do. I had probably a 2-week period where I thought I'd retire and do nothing. But after 2 weeks, I was like, I'd go insane.
And anybody listening to this, Barry is somebody, he's an operator. He does not stop. I can't imagine you not working on something.
Yeah, I realized quickly that I don't think I'll ever be able to
No,
successfully
I don't think
retire.
you're ever going to stop. No.
Yeah. So we were looking for different things to do and companies to invest in, and what was kind of the next act in life. And David had approached us and said, "Hey, why don't you guys invest in my fund?" I started an investment management program or company. He was moonlighting at the time to get it going. The fund had a whopping $50,000 in it. And
Amazing. And what year was that? What year
this was
2009, right?
2009.
2009.
Yeah, 2009. And so we knew that David was, a very accomplished and brilliant data scientist, but it wasn't a company yet, right? It was Dave kind of moonlighting. And so Sean actually had this, crazy idea and said, "Hey, why don't you go build the business with David? Like, band together with him and start working, to build a hedge fund." And I was like, "I don't know, anything about the hedge fund business.
Wow.
What are you talking about?" And I thought he was crazy at the time, but, we thought about it long and hard and talked with Dave about investing in the company so that he could, quit his day job and do this on a full-time basis, and I would come work with him. to build the business, and invested in the fund to try to start to prime the pump to get, a reason.
And that was a hard time, 09. I mentioned the housing bubble. Everybody was sitting on their hands for a couple of years weren't they?
Everybody was retrenched. It was at the time, it seemed, kind of crazy to start a hedge fund or investment business. But if you're wild and crazy, you do these things no matter what. So we started very humble beginnings. And it was interesting because we did fairly well on the sale of our first company. I remember, our humble beginnings. Dave and I, we did everything. We wore every hat in the company at that point in time, and Dave was even our travel agent. So, Dave would book
some good ones.
He booked our hotel room, and I remember I went from, I don't know if I stayed at 5-star hotels, but at least probably
you were
4
doing
stars.
all right.
I was doing pretty well in life, and. The first hotel room that he booked for us in New York, I think it was called the Pod or something.
I know the Pod.
And you literally couldn't open the door and have a suitcase on the ground. You had to put the suitcase on the bed, then put it on the ground. And I was like, Dave, what did you book us in? It's like we're in closets. But those
bargain.
Yeah,
it was a great bargain.
But those humble beginnings, I've realized as an entrepreneur that, and I tell young people and anybody that listen to me that the fun part is the early days.
100%.
That's when you're really making it happen, and we're fortunately getting to do that again with the health company.
Yeah. With the health company, yes, and sometimes I have to remind people in the startup world that this is a very unusual health company in the sense that we do have some backing in terms of the Voloridge Investment Management. So we have this kind of a backing. But my experience in startups is I love the part where we're on the not that I want this, by the way. I'm not okay, great, we can do that for you, But there is something special about really grinding it out and wearing many hats and all of that. I think that's really cool.
Yeah. We get the best of both worlds if we can do it right. We get to be a startup in an established firm infrastructure, but there's dynamics to your point that we got to be cognizant that when you don't have that, fight for your life mentality, does it change things? So I think we're doing it the same way for the most part, but there's certainly differences, right? We spend money on things that.
Well, look at our studio.
Case in point.
You don't do this in a startup, but this is what we get to have because there is that backing.
We get to have more fun.
We get to have a little bit more fun along the way. Now, listen, for both of you, you start this fund. There has to be moments where you start. Are we doing the right thing? Is this actually going to happen? But was there a moment where you're like, wow, let's do this. We're on our way. Like this feels really special.
Yeah. What was the moment for you, Dave? I have one or two in my head.
Yeah.
I'm curious.
For me, I knew I wanted to make a shift and get into the health space. So around 2020, I really got into the research and started digging into the longevity research. So I thought, again, I made enough money at Voloridge Investment, so I was thinking, okay, maybe I would do some good research through the foundation and make some discoveries. But as we started digging into research, I realized that it was more than just the research findings, that we had the ability to actually change the system to be better. And to do that, you need a company. So I would say it was about 2 years ago when.
Okay, but that's for the health side. I actually want to go back and talk about the investment side.
Oh, okay.
And I do want to fast forward to the health side, but I actually want to go back to when you guys, because everybody can look at a hedge fund and the investment go, you guys are lucky. It's like 10 years into, you're so lucky.
Right.
And you just want to slap them and go, do you realize what we went through?
It was a bumpy ride.
Yeah. And so that, I guess my point is the bumpy ride, but then you have that moment where you go, oh, this is actually something.
Yeah. So for me, it was sort of that history of, I was always competitive and I was always liking to solve bigger and bigger problems.
Yeah.
So I would go, like these data science competitions would go from a 1 week competition to a 1 month competition to a year-long competition, and I was doing well at it. So to me, when I thought of, I did some consulting for a quant hedge fund where they were applying some predictive models. That's when I realized that this was the ultimate data science competition. Was that this is a problem many people and data scientists and professionals work on and are not able to actually predict the predict stocks consistently and successfully. And then I tried some models and realized that, okay, with all these capabilities, that we might be able to do this. And that was really the inspiration, that we could compete in this ultimate data science competition and earn some money at it.
I love that, the ultimate, because it's real world.
Yeah.
But when did you feel like you were winning in this competition? What year? Or how long in were you?
It was harder than I thought. So I would say it took a couple years in to really have.
So let me add a quick story that Dave will remember. So this 2010, I had, invested in the company, was working with Dave, and I was drawing no income. I said, hey, I did well enough in my first company. I don't need to get paid anything. So I'm working for free, put a good chunk of, my proceeds and let's call it life savings at that point into Voloridge. So it's near the end of 2010, and we're kind of scrambling because we had a flat year. This was our first full 12-month period as a hedge fund. We had a partial year in 2009 of track record, but 2010 was our first full 12 months, and we were performing, like I said, flat, which isn't great, and you're really wanting to come out of the gate strong to have a chance to survive as a hedge fund. So we were, like I said, scrambling, and Dave was, in the Dave cave working around the clock to revamp our models and improve them. And so it was 2011, probably early 2011, Dave came out with a new model that we deployed, and it was like a money machine. It was
amazing.
It was outperforming simulation. It was making money on what felt like almost every day.
Oh, that had to feel good.
And it was that moment, it was probably like March of 2011 or so, that I think we looked at each other and went like, we think we got something
this
here.
Is something.
Like this is, we still didn't have a lot of AUM or anything, but we felt like we're on the right path.
Yeah, that is so cool when you have that first little glimpse of moment. How did that compare to the actual S&P or the NASDAQ or Dow? I mean, are you comparing, when you're doing a quant, are you comparing to these or?
Not really. We're beta neutral. So, hedge funds by, general approach they're not going to have a lot of beta exposure or any beta exposure, because you can get that very inexpensively. So when I say beta exposure, I mean, that's what you get when you invest in, say, something like the S&P 500. You can do that in a ETF like SPY and pay, 10 basis points or less. So you're not going to, as an institutional investor or any investor, pay a hedge fund, 2 and 20 or whatever the fee structure is to give you beta exposure when you can get that for near zero,
nothing,
right?
Yeah.
So firms like us have to have, some unique alpha that doesn't have exposure to common factors or things that you can get very easily or inexpensively, right? So we didn't really, care what the S&P was doing, nor do we today. If the S&P's down, 20%
a
a year,
game.
we can make money. If the S&P's up 20%, we expect to make money on an absolute basis in all market conditions.
Amazing. So would you agree? Was it at that March 2011? And was there any other?
Maybe February.
Yeah, and so
he's always trying to front run me.
Yeah, there has to be a self-belief then that comes with that. I know you'd won all your competitions, but this is now real world. Did you ever feel the pressure of bringing somebody in like Barry, who's, like you said, he's given a fair bit of he sold his business, he's kind of all in. Did you ever, feel pressure to go, oh, geez, now I got to step up?
I would say I did. The pressure was part of it because, like Barry said, like 2009, we did okay. And then he came on 2010, quarter one, we were up for the year. And then Barry invested the money in us and all his faith in us. And then all of a sudden we just start going down. And so I'm working in my corner October, November. We go into December actually slightly negative for the year. And I just worked my tail up. To me, the fact that I was letting somebody else down was additional motivation. And then we got this new model in place with new technology, new techniques. It looked really good in simulation, but you never know till you put it to the test. And then December, we pulled our year positive. It wasn't a big positive year, but pulled positive. And then January and February were just, like Barry said, that's when we said, okay, this is it. It really works.
So what happens then? Investors start coming and knocking, and it's so easy
no.
now. You just
No,
go,
not
oh
at all.
no, one at a time.
Oh yeah, not at all. Yeah, I mean, investors are paid skeptics, right? So they are going to be patient, especially with strategies like this. And bear in mind that the majority of capital, even today, 16 years later, is still managed by, fundamental non-quants.
So quickly, just explain those. Just for
So
our listeners.
fundamental analysts or managers would be people that look at things like cash flows and earnings of companies.
Like Warren Buffett.
Yeah,
Yeah.
like exactly
Yeah,
the Warren
yeah.
Buffett approach
Yeah.
of what's a good valuation for the company. And now the technicians in the market have been around for a while, which they'll look at technical indicators like momentum, all the various technical indicators to say, well, prices are moving not just because of fundamental influences, but also from technical. So the technical analysts or practitioners were kind of the front runners or the grandfathers of quants. Quants today use every variable we can find, whether it's fundamental, technical, anything that you can get that has predictive power, right, is fair game and generally used by quants today. But the majority of money was not managed back then, nor today, like I said. Back then, it was, you had the pioneers in the field, the Jim Simons of the world, from Rentec, Two Sigma, D.E. Shaw. There were some other firms that were, coming of age, but it was still kind of a sleepy cottage part of the industry. So going to institutional investors and saying, we have a quant strategy, you immediately had even more skepticism than you would if you showed up as a fundamental guy that said, hey, here's what we do and here's why we think
It's
we
not
have
that long
edge.
ago. I mean,
It
it's
wasn't
not
long at
that
all.
long ago. I kind of feel like 2011, 2012.
Yeah, I joke with David and say, there was terms that I was advised. I had some, we have some mentors in our industry. Since you asked Dave about mentors, one of the firms that invested in us in 2012 that Dave mentioned, really good friends of our firm, that is based in Charlottesville, Virginia, Quantitative Investment Management. Great guys, mentors to us in this business that didn't know much about it. And I remember, them kind of coaching us saying, there's key things that you'll say to investors that may spook them a little bit. Like saying things like machine learning or AI is like, whoa, that's kind of taboo. Like, 'cause people don't understand, they think it's a black box. So there was a lot of things that we had to learn, and going back to the thing I joke with Dave, we went from all of these things being taboo to today. Dave's like the sexiest man alive because he's an AI guy, right?
Yeah,
So,
just your data, just your data modeling.
And a
Slow
data-
down,
data
gee
way of
whiz. Yeah, amazing. And so looking now, how does Voloridge compare to the other quant funds out there and its track record? How's it where is it in the world in terms of performance?
well, we're in a very regulated environment, so we can't share returns, on kind of public airwaves, so to speak. But we've done very well. We've received awards in our industry and are considered in probably the top decile of quant funds and quant firms of all time. So,
Congrats, guys. That's huge. That's
yeah,
really
but
cool.
going back to the story, I mean, it in the hedge fund industry, I think this still remains true today. You had to get to 100 million in AUM to be institutionally qualified, right? So institutional investors, if you had less than 100 million, they're like, that's cute. Call me when you get to 100 million, and we'll actually.
So how do you get to 100 million if you can't?
That's it's chicken and egg.
It's a real problem.
Well, the additional thing was you can just have a year or two, doing well. We were told early on, okay, there's a lot of hotshot funds that kind of do 1 or 2 years great, and then they never make money again, right? So people start to look at you when you have 3 years at this rate of return, and at 5 years, okay, then they'll really believe it works. And it happened exactly like that. It was like nobody, very, very few investors, and then after 3 years, we started to get a few bites in institutions, and at 5 years before we knew it, we were at capacity and couldn't take any more investment.
Wow. And so that goes until today. Like, if you got people knocking on the door wanting to, I mean, I don't know how much you can tell us, but basically the success of Voloridge Investment Management is that
We could say we haven't taken new investors in
of years.
in many years.
Oh, wow. Yeah.
And
So you won't take my funds because Laura keeps saying, Greg, how do we get I'm just kidding.
in addition to that being that capacity, there was one month there was some unusual events, and we actually dropped about 8% in that month. And investors actually called us and said, "Does that mean you have more space? Can I add?"
Wow.
And we actually had funds in the door within a week.
That's a nice pat on the back, isn't it?
So that's
they're looking long term, and they're looking at what your track record. And how long does it take for a fund to gain a track record? So okay, end of 09 you sort of started. We're now 2025. That's 15. Is that now a track record, or is that still? Are you guys still early? Are you guys still?
Oh no, yeah. Now I'd say we're probably deemed pretty well established. Like Dave mentioned, I think 3 years is getting to the point where it's more measurable. 5 years is getting into the even more of the sweet spot for investors. But once you get past 5, people view your dependent on your investment strategy. Now, if it does what we do, then that's a pretty good track record in terms of measurability and somewhat reliability, I guess one might say. But each strategy is different. Like there's people that are trying to do, going back to the question you asked before about the financial crisis. If you're an investor that's or have a strategy that's betting on outlier or some less common types of patterns, that's a different animal.
Yeah.
Right? What we're doing is trying to.
It feels like a lot
patterns.
of luck on that. Like it feels like you're just almost getting there's an element of luck.
There's definitely a fair number of investors out there that have made tremendous amounts of money by whether you call it fortuitous or lucky timing. They put the right trade on at the right time. Is that skill, luck, maybe some combination? And doing what quants do, I think it requires more skill, generally speaking, because it's you're trying to deploy models that are finding relying
100%.
on patterns that have existed.
It's a skill. It's
constant.
a talent and a skill, and that's why you have people like it. But have you picked up on any of how to read data and modeling over the last 15 years? I mean, obviously it wasn't your background, and nor was hedge funds. I mean, there's obviously a lot of learning.
I've learned a lot about it. I mean, I'm certainly not a data scientist like David today.
Yeah.
But learned a lot about kind of how you build a strategy.
Yeah.
Such that in the early days I was kind of the prairie dog for in addition to Dave for finding data sets and how do we exploit features in data sets and stuff like that. So I would, tug on Dave and say, hey, we should look at this type of data to see if there's some signal there. And in the early days, finding those data sets was much more challenging than it is today. Today you have vendors that will, prepare and maybe some nice packages, although there's nuances in all these data sets. They'll knock on your door and say, would you like to buy this kind of data? 10, 15 years ago, you had to go find that data, and it was not nearly as readily available as it is today.
I'd say Barry could be an honorary data scientist.
An honorary, there you go.
Doesn't have a math degree. But,
Should we get him a T-shirt made up or something?
He's with us in all the meetings on the things we look at. Because data science, again, or machine learning in general, it's not just about like taking a bunch of data and throwing it through a model, throwing it through a neural network and predicting some outcome. There's so much that goes into it. There's so many data issues to deal with. There's a whole pipeline. There's normalizing your predictors and your outcomes, and there's future data that can leak in if you're not careful. So there's 100 different problems that can happen if you're not looking at every detail.
I'm glad you're touching on this because I've been curious about things like, when I first signed, there's a lot of learning on my end of understanding what data science is and modeling and everything else and all the terminology, and there's almost a language unto itself. But I'm actually curious as to you kind of explaining to listeners, what is data science? What does it actually mean? And then what you just touched on then, what separates good data from bad data? And we're learning a lot about that in health, but I'm curious as to get your words to describe what is data science.
Well, I'll start with it can be a little fuzzy what people call data science versus AI versus machine learning. Because there are many different forms of AI. Some people consider this a form of AI, and you are actually teaching the machine or teaching an algorithm to learn from data. I like to call it data science because there's the whole process around it. It's like all the data prep and data flows. But in the end, you're creating a formula. You're teaching, the machine is learning a formula. You want to predict some outcome. So whether it's the price of a stock or if you want to predict probability of a heart attack of somebody, and you have a series of inputs that you train, you feed the algorithm enough data, and it'll learn. It can learn a very accurate model of that outcome.
Mm-hmm. So when you're looking at the data, is it are you being led by data, or are you leading the data to sort of predict an outcome? Like how much is the data actually steering you versus the other way around?
I mean, it's kind of a little of both. I mean, it's important that we don't come in with bias, and like you can come and create a model if you're determined to create a model with a set outcome. Like that happens all the time. Like there's this groupthink in research, like the idea that cholesterol is predictive of heart disease, and it's really not that correlated. But if you think that going in, and you can kind of incorrectly get the algorithm to make it look that way. So we're unbiased from that standpoint, but we have to also set up the data in an unbiased way. So really it leads with the data scientist setting up the data in a way that it can learn impartially. Then the data tells us. The data says, okay, A1C is the number one predictor of a heart attack, and you sort of get the whole list, and it's completely unbiased. We didn't go in with some agenda saying, like, I'm going to prove this marker better than that marker.
Which it seems to me, I always feel like it's almost through data we can almost prove what we want to prove if we actually really want to go about it. We can find the data to back ourselves up. And so when in your research team, do you all work independently and come up with your own and then come together, or how does this? Because I would think that would be kind of a good way, because you all kind of approach it a little bit differently. Last night we were having a conversation with Philip, who's down in Australia, and he one thing that stood out to me, he said, look, when we look at the UK Blood Biobank, I remove people that have died in the study. And you said, I actually keep them in. And what I liked about that is you're both kind of approaching it differently, but both ending up at the same destination. And I thought that was kind of cool.
Yeah, I think one of the things I've learned in the 15 years of developing the investment company is how to go. In the first 5 years, it was all my own models. But then I really hit a cap of how much I could do, how good those models could be, how much we could manage. And so really I developed the idea of how do you work optimally as a team and recruit other data scientists as good as myself. And there has to be some level of collaboration, but also some level of independence, because you don't want to have groupthink. You don't want
100%.
You don't want everybody to use the same process. So it's sort of like you encourage the other data scientists to try their own ideas and run with it, and then you sort of come together and you either maybe decide one method's better, or you take a little bit of each method and you put together into what is the best as a team.
Yeah, I think that's really cool. And Barry, talking about data science, were you always a believer? Like, were you a skeptic at all, or did you kind of just lean in and just go, look, this is what I'm doing and I'm going to believe it?
No, I think I was a believer, the adage that, the data doesn't lie, and granted there's, books like How to Lie with Statistics and, the old adage of there's lies, damn lies and statistics. So used the wrong way, data can, as Dave was just alluding to, can tell you what you want to see, or you can manipulate the data to tell a story. But if you don't have that bias, then the data is the best representation of facts.
Yeah.
And so that's kind of our core belief.
So what do you think then, you spent the last 15, 16 years, well, you forever, but using data science in finance. And we were talking, pre-recording how finance have been leaning into data for a while, but health and the world of health we're still somewhat on a new frontier. Would you agree with that? Like it's still pretty early on for health?
It's pretty new in health, and I think that was part of the excitement of it, that we saw that we could be the ones to develop quality models in health that could be what make people people could make better medical decisions or personal decisions, based on actual data, and it would empower people. So really, we saw that the same thing that we did with financial models, saying, okay, we're not going to just go with what the experts say. We're going to actually follow the data and see that we know that we could do this in health. And we're also patient too. We know that it took like 5 years or 3 to 5 years to get to that inflection point. So I mean, right now we already have resources out there people can use, but again,
we have the simulator, and we got a bunch of other things people got to go use and look at the.
But people don't know us. People are going to be skeptical, and then that's fine. It's there for.
It's a patience game.
Early adopters to use. In the end, it's not just a matter of having the most accurate model, but also to help people understand the model. And that was something I learned very early in my career. Like, okay, we have a model of health, and okay, well, 100 other players got their model of health. But we know ours is much better, more accurate, but everybody else doesn't know it. And the way to do it is you have ways to explain the model. Like if you have a high risk of something, these are the variables that contribute. These are the correlations. You have to show the person so that there's actually this belief, not just ourselves believing our accuracy, but that others can see that this makes sense.
Where are we building our models from then? Where are we getting the data from? And to my question earlier about sort of good and bad data, in the health space, data, like you were talking about, was harder to get 15 years ago. Is data easier to get in health now? Is it dirty? How do we get good data in health?
It's absolutely easier to get data now than it was 5 to 10 years ago. But it still needs a lot of cleaning. I would say there's dirty data. We all know like EHR data, like medical records. They go from handwritten. There's different conventions in different facilities. Again, we had seen all this in finance and dealt with it. You can actually normalize all this stuff. It just takes it just takes a lot of work.
Yeah, EHR for anybody listening is electronic health records in the US. That's what we use, where everybody's data is in one point, right? It's like you go see your physician, they collect all your information. So is that a little bit like if you think of EHR records and data, that goes from everything from seeing your physician for a head cold and a broken bone to doing blood tests. And so I guess, how do you scrape that to get actually useful data? Because I don't know, that feels like a lot of things that you probably don't need.
Well, I think there's a whole data pipeline. Right, so doesn't just go right to the data scientist.
Okay.
You have to have data analysts, data engineers, and it's got to be tightly collaborative with the data scientists. And so really, it's that process of working as a team.
Cleaning.
To get clean quality data into that final model that is reliable.
What do you think is going to be the biggest hurdle in health? And is it the physicians themselves saying, hey, we've been educated a certain way and you're coming back and your predictive models are actually not in line with the way we've been taught? Is it pharmaceutical companies? Like, what are some of the hurdles in terms of, you now have this great information coming out. How do we actually say, hey guys, we're on your side, we're on your team, we're not saying you're wrong, we're just saying here's new information. How do we get it out to the world properly?
So the way I see it is there's sort of 3 categories of adoption that we're looking for. There's there's consumers, there's businesses, and there's the research community. And in all areas, this can be applied, like to do better research, have better healthcare in the businesses and consumers. So I think there'll be, again, a lot of it is just creating some level of understanding, probably physicians, because it's just they've got successful practices already. There's not really as much motivation to change or try something new. And again, they've got to stick with the standards of the organizations. So I think there'll be more pushback there. But then again, if we can get consumers to understand and feel good about this, then that sort of puts some pressure on healthcare professionals. There's functional medicine doctors out there that are more looking at proactive, they're looking for tools to help preventative care, and these basically are the tools that we're providing. And I think the research community genuinely wants to do better research, so they just got to see that these models are good enough that we need to demonstrate. We're actually start doing some of our own studies where we use the models in the studies as potential endpoints. And once it's demonstrated with a few good top studies that this really works, and you can do research better this way, then researchers, I think, will adopt as well. So I mean, we're going to hit hurdles everywhere because nobody wants to change, but
but it's a new frontier. It's exciting, right?
Yeah,
it's exciting to be able to be at the forefront of change, you know?
For sure. I think to kind of summarize it, there's, the dirty data, that we talked about, having good data to do data science and find, patterns is certainly a challenge. You mentioned how, messy data can be from something like EHR data. But even the data that we're looking at, like you referred to in our call last night, just seeing some of the anomalies and things that can, lead to false patterns. You can find a lot of false patterns if you don't really get granular and understand the data. Second is dogma. You mentioned, dogma's very likely to be, a hurdle in the health space, just like it is in all industries, right? People have beliefs and they're not willing to let go of those beliefs until they're really convinced that they should. And then the third is, similar to the investment world, perhaps even more so, though the health space is very regulated, right? So you have the regulatory hurdles and the challenge of making sure that you have transparency for whether it's a physician, someone working at a pharmaceutical company, academia research. They really need to understand how the model is compiled, the validation of it. To be able to accept it as a tool or something that they would use.
Yeah. Look, I think just to summarize all of that, we've gone through Voloridge's journey, looking at data science and what it is and then how that can impact health. I think it's a really exciting time, like I was just saying, to be at the forefront of all of this, to be working with this guy here and his team, yourself in terms of what this can be in the business and company side of it. I'm just honored to be a part of it all. I'm the jock here. Well, I'm not the jock anymore. Sitting at this table, I'm like, gosh, I better get going here. But it's amazing the learnings that we're finding, and I think it's going to be a really exciting time to educate the world and to get to the point of acceptance. It's going to be really cool. But I want to shift gear. I want to get your thoughts. What does that mean to you, I guess, as we all kind of lean in, not to give our ages away, but we're not spring chickens anymore, and we're getting a bit on, and so we start to think about, end of life and, that kind of thing. And Barry, I think we've all kind of talked about, dying short is almost my biggest motivator, almost more than living long. It's like, we've had loved ones that do die a long time. Want to get your 2 cents. What does it mean to you?
So I think just the fact that we're helping the health system be proactive about health would define us as a form of longevity company, right?
Yeah.
So we're about longevity. I would admit I'm all about longevity, but I think people kind of misconceive that as, okay, well, I don't really want to be old for so much longer. And it's really not that. It's about quality of life. It's that I want to be able to do an athletic competition at age 90. So it's really about health span, not lifespan. And that's really what this proactive health will do. And you see plenty of statistics. People who actually live the healthiest and the longest actually have less period of time where they're in a disease state and in pain. And so you see that even today with people who are healthier. And so that's really what we want. We don't want to be in a disease state for, I don't want to live at 110 if for 30 years I'm going to be in a disease state. But we want sort of as long as healthy lifespan as we can, and then we don't want to spend time in pain. We just want to go quickly, right? Maybe right now with our technology, maybe 100, but maybe we'll know more in 20 years and stretch that to 110 or something like that.
So my my go-to for this question, which I actually just had a conversation with a very close friend a couple weekends ago, and he told me, he said, I was explaining some of the things that we're working on, and he said, well, Barry, I don't want to live till I'm 100. And I said, well, if I gave you a trade-off and said you can live till 100 and you can have several months of morbidity. Morbidity is, the shitty phase of life, right? It's where you're dealing with pain and discomfort, and it's just generally you're in health decline. Call it preparing to die to some degree. So you can have 7 months of that, or you can have an average lifespan, say mid-70s, but you have 7 years of morbidity. Now, which one do you want? Do you want to live till 100? Or do you want to live till 75? And he was really seriously contemplating, well, geez, maybe I'm thinking about this all wrong.
Yeah.
And the tip of the spear for me in this, or the catalyst, we had an author of Age Later before we started the health company. Throughout the entire history of Voloridge, we've had different people come in and talk to the company at times, and we read books about health, for our own insights. So we had the author of Age Later, Nair Barzilia, I think is his last name is pronounced. And he actually shared that statistic. His research is on centenarians in blue zones, and he shared that morbidity kind of trade-off and what he's seen in the research between people that have a very long lifespan compared to those that have the average. So as Dave mentioned, it's not just about living longer, it's about living healthy much longer.
Yeah. And I think my great motivator, and I think I said it to you guys, I'm an older dad. I got a 5 and 7-year-old at home. My biggest fear for them is that they're having to look after me on my deathbed for a long period of time in their potentially 20s and 30s when they need to be creating their own lives. And so, I've had a kind of a selfish life being an athlete, had kids late, which is a little bit selfish as well. And now I'm kind of like, okay, if we can be creating something where I can just die short at the end, I'd be stoked with that. I don't want that 7 year, even 7 months seems a little long for me. 7 hours would be even better. 7 minutes. Can we really
just getting greedy?
Can we really just make this? And so I think I think we're coming from it from the right way, where we're trying to say to people, look, we want you to just have a better life, and honestly, a shorter death. It sounds a bit morbid, but it's
true.
I don't know. I put my father, when he died in 2019, and it was years and years and years, and it's like, it's not good for anybody. It's not good for the person that's dying. It's not good for the people that are actually living with that person. And so if we can give that to people, man, what a gift.
Indeed.
All right, but before we go, I want to finish off with one thing. There's a thing going on TikTok, which I know none of us are on, but the editorial team said we should talk about this. And it's called We Listen and We Don't Judge. There's a whole thing going on. I guess couples kind of admit what they're up to. I don't dare play it with Laura. But anyway, you don't judge. Somebody admits what they've done wrong. We're going to have this section that's called We Listen and We Do Judge. So we're flipping on its head. And so what I wanted to do is, as we wrap this up, I want to hear about some of the weirdest health hacks that you've tried in your life. And I'm kind of putting you on the spot here, so I'll give you a second. What has maybe failed and what actually surprised you and work? Is there anything that jumps out that you guys can kind of go, I tried this for health and it worked, or it didn't work? And I can lead it off if you don't have anything, because I am putting you on the spot.
I have one, but I don't know if it would qualify as very weird. In fact, and I'll give Dave credit. Dave tipped me off to this probably 2 years ago. Doing strength training, I would say if I went into the gym and squatted in the morning, I would have a 30% or higher chance of walking out of there with, tweaked my back.
Yeah.
Not severely, but just, uncomfortable. So Dave said, you should start foam rolling. And so I started foam rolling about a year and a half, 2 years ago, and I do it religiously. I do it every day for, 5 to 10 minutes. Wow. And I did tweak my back in CrossFit, doing, snatches and some other kind of Olympic movements on Saturday this past weekend, just minor. But I realized, as I was, waking up with a tight back on Sunday, I was like, wow, I have this happen like once, maybe twice a year now. So
doing the foam roller is
just
really
doing
helped.
the foam rolling, religiously on my back has made a huge difference. My back, my hamstrings, quads. Like I said, it doesn't have to be 30 minutes or more a day. 5-10 minutes seems to have helped me tremendously.
It's funny you say that. When we were racing, we worked with a company called Trigger Point Massage Rollers, or TP Massage Rollers, and this is back in 2000 or whatever, and they were on little roller skate things, and And we would do it every morning religiously, the quad roller and the calf roller. And it just kept us being able to keep going. And not only that, I feel like we got to generate more power because we were really working on the fascial system as much and putting blood into the working muscles. But it's funny, when I did retire, I remember going, great, I never have to do all that stuff I hate doing. Because I always loved the hard work. I loved the swimming, biking, running, going hard. But I never liked doing all the rollers and all the yoga, the pose. And I'm like, oh, that's actually the shit that I got to keep doing now. It's like, damn it. Yeah. What about you, mate? David, you got anything?
Well, there's about 1,000 that haven't worked.
Yeah. Like what? Have you got anything that hasn't worked that you've tried?
Well, yeah, I mean, I've tried exosome injections. I've tried some peptides for injuries, the red light. I mean, I know some people swear by it, but I know we need some better studies. So, supplementation, I don't know if it's done anything. I'm taking a lot of supplements. But I would say the two hacks that did work, one the foam rolling, and it's with the vibrating roller. And actually, Tom Brady was the one who told me to do that.
Oh, really?
And because
you mates with Tom Brady, are you?
So, well,
you and Tom just going, hey, mate, what are you doing this morning?
I was fortunate to have dinner with him once.
Yeah.
And so and it stuck. So I actually have a TB12.
There we go.
Vibrating roller, and I have no ownership in the company.
There you go. There's a plug.
And the second thing is the cold plunge.
Yeah.
I would say there's still not enough studies to show why it works, but I can say that I feel so much better, so much more alert, mentally sharper when I do cold plunges a few days a week, just 3 minutes in 40-degree water, and I just feel
it's amazing, isn't it? If you overdo it, though, I find the dopamine hit disappears. If you do it every day, but I got to the point a bit like you're saying, if I've got big meetings or recording a podcast or something, I do an ice plunge and I'm just like, my brain is on.
In the beginning, it was like, let's see how long we could do it. 5 minutes.
8
minutes.
It becomes an ego-driven thing.
But then I realized, okay, just 3 minutes is enough to get my body temperature down.
Yeah.
I could be completely stressed, and you know how you can get into this stress state where nothing, breath work, nothing, whatever can calm you down. I'd jump into a cold plunge for 3 months and I come out perfect.
It's amazing, isn't it?
There's something about that.
I think there is something about that dopamine hit or something that you get from a cold plunge. But I do find it's one of those things that I go on and off with. As athletes, we always traveled with our ice plunge pool and our refrigerator and everything, and we'd set it up. And especially for short course racing, which is anything under 2 hours kind of thing, so it's kind of all out speed, we would do a lot more ice plunging to recover faster, kind of like the football players do. You want to recover fast. But we found when we started doing some more long course stuff, we actually wanted the fatigue to stay in the body longer and have the body forced to recover, and we actually felt better not doing it. So in terms of the recovery side of things, in terms of the brain and just feeling the neural cognitive effects that you get, it's amazing.
I have a funny cold plunge story for you guys next time.
Oh, next time?
Next time. Cliffhanger.
Cliffhanger. We got to wait. There you go. I have one. I used to one thing I experimented with for about 3 years is running in full tracksuits that were made I was with New Balance Japan, big shout out, for many years. And they used to have these tracksuits, tops and bottoms, and I used to wear white gloves. And even in like 100-degree Fahrenheit, 40-degree days, I'd always run in them, and they'd be filled with water, like inside. Like they became my own little steam rooms and saunas. And I did that for the longest time. And I think some of those years were actually my best years. So I don't know the science behind heat adaptation or humid adaptation. I was living in Boulder, Colorado, very dry climate, but I almost created this humid layer on my skin. And it was almost my own little biohacking thing that I actually think worked. That was one I'll give a tick up to. I've also got millions of things because I think a lot of health starts in the performance world where people are trying to find the new thing. And I think Laura and I were always trying to, I remember we had altitude tents when altitude tents just started, and even when we were trying it in Boulder, we would live at 6,000 feet. We'd put the tent up to 12,000 feet and we'd live in that zone. And Laura could go in for 2 to 3 nights a week, but I'd live in there, and it was all about adding more stresses and could your body adapt. And so some of those things really worked. I did one. Here's a story for you, just in terms of a stupid training. You talked about overtraining, in the last 10 years. So getting ready for the 2000 Olympic trials. This is going way back, but I was doing a lot of 200s and 400s on the track, and people that know running would know that Emil Zodopek, the amazing Czechoslovakian runner of the 50s, he won the 5K, 10K and the marathon at the one Olympics person. And he did it all by running 200s and 400s at race pace with 200 float in between. And so we did a lot of that kind of work. Anyway, I remember doing this. There were 2 treadmills, and my coach, Brett Sutton, said, right, Greg, I want you to put the treadmill, there's 2 treadmills there, and I'll tell you that in a moment why. I want you to set the treadmill to 22K an hour, which is, for you guys, what is that about? It's 245K pace, which is probably 430 mile pace. And so very quick, and what you're going to do is run 35 seconds on, 25 seconds off until you drop. That was the workout. So now there's a mental problem with it, and we're all competitive bastards here, so I'm like, oh, well, screw you. He goes into the corner and he grabs his newspapers and he just starts reading. And so I remember the first sort of 40 to 50 of them kind of really hurt. And then it just got into this zone. So I did that one. I'd go from that one treadmill because it was soaking wet, it was sweat, jump on the next one, do another 40. So 150 of these later, finally he gets up and says, that's enough. So that was just shy of a marathon of doing 22K an hour.
Wow.
Sounds amazing, great story, but actually I was so broken, I was so inflamed after because that wasn't just a one-off, there was many of those. By the time I got to the Olympic trials, completely fried, missed the Olympics in 2000, home Olympics. But it was a great story now, so it's like one of those remember wins and I look back at it and go, what the human body can do, and turning the brain off and going numb to movement was actually, that was something that I look back and go, well, I'm kind of glad I did it, even though it didn't work out in terms of going to the Olympics in 2000. Yeah.
That reminds me of the last man standing race. You do that? Have you done that where I think you go 5 miles each hour?
Oh yes. What is?
But you just keep going.
No, that what is that event called?
It's last man standing.
It's called Last Man. They run it. It's 4 miles, so 6.4K an hour, and they go. The winners are doing 4 days straight.
That's insane.
Look it up. It's unbelievable.
I don't know about 4 days, but yeah.
No, it is. I think the winner. There was a whole bunch of them that did 100 hours. So what?
The sleep deprivation alone.
Yeah, and the guy that won went to 111 hours or something. Have a look. We got to find it. I'll put it in the show notes.
My son actually won one of those.
Oh, did he do one of those?
But it was about, ended up being about 12 hours or something like that.
It's insane. No, the world record though. Have a look at it.
Okay.
We have to look at this later. But anyway, guys, we digress. This has been really great. This is really great just to hear a bit more of your backgrounds, and
it was fun.
it's very cool.